Hello, everybody. Dan Lucas from Credo here, and thanks for joining me on 50 States in 50 Days series. And today we are on day 45, and we are talking about the 45th state admitted to the Union, which was Utah. And I was just in Utah about a year and a half ago on a sort of a retreat where I got to go skiing and enjoy the outside. And man, it was just gorgeous there. I loved it. Yeah, I guess it was just right before kind of um, the COVID-19 pandemic hit, and we were still sort of life as normal, but at that point in time, so at the making of this video was about 18 months ago. But man, that was just I can't wait to go back. Hopefully they'll have that same retreat again, and I'll get to go back. But man, that was fun. Anyway, beautiful, beautiful, beautiful state. Um, that being said, and I love skiing, so it was fun. That being said, Utah, again, was 45th state admitted to the Union, and it was admitted on January 4th, 1896. Um, here we are kind of getting to the turn of the century, and we are still adding states out west, kind of filling in the middle of our country, in North America, still establishing those borders on the south, certainly on the north, to our north in Canada and Mexico. But yeah, so we're just kind of filling in the country here and getting ready for the turn of the century and the Industrial Revolution and even World War One, unfortunately. But in any case, I want to talk to you today about Utah tax credits and some of the tax incentives. Now, Utah has their tax credit program. Well, they've kind of categorized them in a way that makes it a little arduous to do for a video like we've done before, because they're not separating necessarily by type of credit or industry. They're kind of separating them by the nature of the credit, whether it's like refundable, non-refundable, apportionable, non-apportionable, which we don't really need to go into all that jargon necessarily. But I'm going to read all of the credits from top to bottom, and then I'm going to go back and have some commentary on some of them as well. And then at the end, it shouldn't take long, maybe 3 minutes or so, I just want to point out a few other things from the Utah Department of Economic Development, which are not technically tax credits, but still very useful for you to know in your business. And if you're watching this video, it's going to be something that can help you, right? Because every dollar I can put back in your pocket, I want to do that. So, okay, so let's start off with the list. All right, they have a capital gain transactions credit. They have a retirement credit. They have a Utah My 529 credit, which is college savings credit. They have a health benefit plan credit. They have a gold and silver coin sale credit. They have an at-home parent credit. They have a qualified sheltered workshop cash contribution credit. They have a carry forward of clean fuel vehicle credit. They have a historic preservation credit. They have a low income housing credit. They have a credit for increasing research activities in the state of Utah. They have a carry forward of credit for machinery and equipment used to conduct research. They have a credit for income tax paid to another state. That's typical. Most states have that. I think they're just throwing that in there. They have a live organ donation expenses credit. They have a renewable residential energy systems credit. They have a combat-related death credit. They have a veteran employment credit. They have employing persons who are homeless credit. They have achieving a better life experience, coined ABLE, ABLE, program credit. They have a military survivor benefits credit and a student prosperity savings program credit. Let's see, last four here, they have a renewable commercial energy systems credit, a special needs adoption credit, an agricultural off-highway gas / undyed diesel credit. And then the last one they have listed is the farm operation hand tools credit. So, okay, any of those kind of ring a bell by name or kind of sound familiar to you? You have more questions on, let us know. I'm going to go into the detail on a few of these, but if I happen to not, give us a call or send us a note. Go to our email or go to our website at credofinance.com. Put a comment in the video. let us know you have a question. Myself or my team will look into it for you on a case-by-case basis and see if we can help you find out more details on it to see if you qualify, right? So if you think you might or suspect you might qualify for something, assume that it's worth looking into, and we'll help you do that. Okay. So first thing I want to look at is, because it sounds kind of unique, is the capital gain transactions credit. And this is, you can claim a credit for the short-term and long-term capital gain on a transaction. Okay, and that says if transaction has to occur after January 1st, 2008. So, basically anything now. At least 70% of the gross proceeds are used to buy stock in a qualified Utah small business corporation within 12 months from when the capital gain transaction occurred. Okay, so it's basically a capital gain deferral if you roll it into another like type investment in the state of Utah. And then the third criteria is you did not have an ownership interest in the qualified Utah small business corporation at the time of investment. So anyway, that's pretty neat. I mean, there's something called like qualified small business stock, which is like a federal credit, which you can get up to, or not a federal credit, but it's a federal tax exemption for certain qualified stock, and that's a whole other video. I've done a whole video actually on this that you might be able to find in our library, or you should be able to find in our library, beyond the scope of this. But suffice to say, if you are doing, investing in stock in small companies and startups, and they're in Utah, make sure you're getting this credit. Okay, make sure you are getting the credit on the capital gain on here, because I don't know that I would necessarily endorse just doing something in Utah to get this capital gain treatment, but there's plenty of good companies in Utah. I mean, it is one of the hotbeds of entrepreneurship. So, and it's becoming more so all the time. Okay, let's see. They have let's go to the Utah My 529 credit. So this is, you're making a contribution to a college savings plan, and you're going to get a write-off on your state tax return for saving in college. So that's pretty self-explanatory. Just wanted to kind of make sure there. Gold and silver coin sale credit. This is unique. Haven't seen this before. So capital gains recognized on the sale or exchange of gold and silver coin issued by the United States government and reported on a federal income tax return are eligible for an apportionable, non-refundable credit against Utah tax. That's interesting. I wonder why they would do that as far as part of public policy. But it must be specific to, there must be a lot of activity of that going on in Utah, where people are buying and selling silver and gold. That's really neat. I didn't know that. So if you know anything about that, please put a comment here. I'd love to see some commentary on why they would put this type of provision in Utah tax code. But yeah, I mean, capital gain, gold or silver, yeah, you basically don't pay tax on it. That's pretty neat. Okay, let's go back to the major list. The at-home parent credit. I've never seen this before. Let's look at a little more detail there. So an at-home parent may claim a non-refundable credit of $100 for each child 12 months old or younger on the last day of 2020. An at-home parent includes the biological mother or father, stepmother or stepfather, and they have a whole list of different things that qualify for it. But basically it says if you're a stay-at-home parent, they're going to give you a tax credit. I have not seen that before. That is sort of, it seems like kind of a family value type credit, which, I guess in Utah that's not totally to be unexpected, but I just haven't seen something like that before, but that's pretty neat. Okay, let's see, what else do we have here? The historic preservation credit. We see these credits in a lot of other states where any historical monuments or historical real estate, personal property, it can be sometimes, if you're doing anything to preserve the historic value of it, or for the good of the public, etc. A lot of times it's seen as that. They're going to give you a credit for that. Let's see, the credit for increasing research activity. So R&D credits are huge, and R&D credits are huge on a federal level, and they are huge on a state level in a lot of states. And in fact, some states it can even be larger than the federal credit. Utah's a double dip state where you're going to get a credit on federal for R&D activities, and you're going to get a credit on the states. You're going to get the double dip. States are a little bit different how generous they are. Utah's got a great credit for state and as compared to federal. So and I call this the innovation credit because when you think of R&D, I mean, a lot of people like to think of like lab coats and people walk around with beakers and glasses on stuff. That's not what we're talking about. It's not pharmaceutical kind of R&D. And I really don't like the fact that they use that term. It really should be innovation. And so it can be, something where you're improving a process, a system. You might be installing a new piece of software and you're kind of customizing it for yourself a little bit. So it's really anything that you're investing in I shouldn't say anything, but things that you're investing in to make your company better, that are kind of innovative solutions to different things. You might qualify. If I was trying to recommend to somebody to think about what might qualify, just think about anything that you've spent that you consider an investment in the business. It might be you hired a consultant to come in and help do process documentation. It could be that you hired a part-time C-level person to help with operations. It could be anything that you can think of that you've done in that kind of mindset or that kind of arena could qualify. I'm not saying it does. It could. And if you want us to check it out for you, we're more than happy to. We can easily scope that out with you. It only takes a few minutes. So if you need help on that, let us know. Okay. Let's see. We look at... I don't want to look at the live organ donation one. That seems a little grim. So yeah, there's veteran, a lot of credits for veterans, credits for combat, death, which is awesome. All in favor of that. Let's see, Student Prosperity Savings Program credit. Let's look at that real quick. Let's see. So you can claim a credit for 5% of a qualified donation to the Student Prosperity Savings Program. You're going to receive a donation receipt. Okay, so you're donating to basically a fund. Okay, so this is a little bit give from your heart kind of thing. But if you get it, so let's just say you make $1,000 donation, right? If you make $1,000 donation and you get a 5% credit, now that's pretty close to the tax rate, in the state tax rate. So I would say in essence, this is pretty close to just a full write-off. Okay, so you're making a donation to a student prosperity savings program. You're going to get the write-off, right, on the federal if it's a if it's a qualified 501c3, and that income is going to flow through your state return, but you're also going to get additional credit on your Utah state return, and that's going to be 5% of whatever you put in. So that's pretty neat. So you put in $5,000, I mean, you get $250 tax credit. It's pretty substantial. So anyway, definitely something to look at there. Let's see. Let's go. A lot of things to do with helping out people and families. You can definitely see that in the Utah tax code here. Utah tax code. There's really nothing else. I mean, there's again, some of the ones I listed. I mean, if you're in farming, you're going to want to look at some of the credits there. If you're in, if you're adopting children, there's credits there. Anything military related, veteran related, a lot of stuff revolving around people and family, as far as I can see here. So that's pretty neat. Again, I don't know the gold and silver coin. I'm really curious to see why you get that capital gain treatment there in Utah. It's very unique. Okay, I'm going to shift real quick over to like I promised to, the Utah Economic Development Incentive Program, because there's a few things in here I just want to kind of run through. There is in Utah something called the Economic Development Tax Increment Finance Tax Credit, which is the EDTIF. And that's basically for businesses that are located in economic development zones. There's opportunity zones, that's the federal kind of version of it. And then a lot of states have different zones where they're trying to incentivize activity to take poverty to prosperity, which I'm totally all in favor of this. These are awesome programs, totally in support of all these. They are, let's see, Businesses that locate in economic development zone are eligible to receive refundable post-performance tax credits. That means you get tax credits after the fact, and they're refundable. So that means that you don't, like, if you have a $10,000 tax bill and you have 15,000 credits, you don't use 10 of that 15 and then get stuck with an extra 5. You knock out your entire liability with the first 10, and then the last 5 that you have, they send you a check for it. That's refundable. Okay, that means that you can go past no tax liability and they'll send you money back. That's neat. Okay, refundable is huge. Let's see, so you get, anyway, they have some calculations in here for what this looks like, but suffice to say, if you're in Utah and you're in business, look up these maps. Look and see if you're in an economic development zone. If you are, you likely will qualify for some of these credits, okay, or some type of credits. This is not the only credit. There's not just one type of credit or one credit available for companies in these zones, okay? Let's see. You go in again to, in these qualified zones, they have some additional credits, additional on the R&D side. So we just talked about R&D about 2 minutes ago. On the R&D side, if you're in one of these zones, you can get some additional credits, or they give you a little bit of a bump, a little bit of a magnified credit on it than you normally would get. Let's see. They've got, and then they have some grant programs where there's something they have that's called the Industrial Assistance Fund, the IAF, and this is it's available to companies that create at least 50 high-paying jobs in urban counties. I'm not sure where every county is. We'd have to look that up. And it says that to qualify, the wages of the newly created jobs must be at least 110% of the county average wages. Headquarter project, yeah. Yeah, so if this is interesting. I mean, so basically, if you've created at least 50 jobs, I would look at this and just see what, that's only going to be a small fraction of people that have actually done something like that. So I don't want to belabor this, but if you've done that, you don't want to look at this to see if you qualify for the other parts, because this is huge. All right, this is a huge grant. They have the Rural Economic Development Incentive Program, the Redi, REDI, and this is with, if you're creating high-paying jobs of populations in counties with populations of 31,000 or less. I'd have to look up the counties that qualify, and you have to create high-paying jobs, and you can't be primarily engaged in construction, retail, staffing, or public utilities. Other than that, you can get 4,000 to 6,000 for each new time. You can receive 4,000 to 6,000 for each new full-time employee position, and it has an annual cap of 250,000 per company. So, if you hit the cap, good for you. You have enterprise zone tax credits. So again, we were talking about development zones earlier. Enterprise zones, creating new jobs in these zones. You can get credits of 750 per job with an additional 500 if the newly created job is a high-paying job. A high-paying job is defined as 125% of the average county wage. So, and they have some other, looks like there's some other credits in these enterprise zones. So you have to look up the map and see if you're in one. You can get credits for renovating a vacant building. You can get credits for investing in a manufacturing facility or manufacturing equipment. Yeah. Non-refundable, non-transferable. Wow, it's still, you can generate significant credits especially if you're making those big kind of fixed asset, big machinery and equipment purchases, or renovating a building. And these unused credits can be used carried forward for up to 3 years. Let's see, they have job training, an area of job training. They have grants that can cover 50% of job training costs, which is really cool. And a lot of times they do this in the form of like tax credits where, I know in Georgia where I live, they have something called a retraining tax credit, which, if you're training, there's a lot of nuances behind what that means, but you can get tax credits for training people. This is kind of similar to that. It's a grant, so it's not, it doesn't look the same, but hey, dollar's a dollar. And 50% of job training costs is huge, right? So if you spend $100,000 and you get 50% of that paid, that's huge, right? So basically you're getting training at half cost. So It's discretionary, so you have to apply for it, but why not? Apply for it, see if you can. I mean, I'm sure you can come up with something that is really, great training for your people, and at half the cost, you should be able to leverage that to get a return. Let's see, they have Talent Ready Utah grants. That's for kind of strengthening the education. What do you call them? It's to strengthen collaboration between education, industry, and economic development to help Utah become a better state, et cetera, et cetera. Let's see. It looks like, I mean, if you're a entrepreneur and you're hiring, um, there's a handful of grants you might want to take a look at. We're happy to help you if you want to give us some specifics and see if there's anything you should be looking at specifically. But they've got quite a few different areas of grants. And again, grants is just, here you go. It's like Santa Claus money. And so, yeah, that's what I would say, because there are some details behind it. But, all in all, if you're creating jobs, that's what these are targeted to. So you may or may not qualify. Or you may qualify if you're creating jobs, or there might be a better than 50% chance you do. Then the last thing I'll talk about is they have a sales and use tax exemption for new and replacement manufacturing equipment. That's probably very easily missed by a lot of companies buying that type of equipment, not getting that exemption. So if that happens to apply to you and you're watching this video, make sure you're getting that sales and use tax exemption. Or if you're out of state and you have a nexus in Utah, you want to make sure you're avoiding that use tax, because a lot of times it's hard to keep track of all these laws in the states that you have nexus in and avoid those use taxes. So in any case, that is going to wrap up the video for Utah. So any comments, questions, or anything, just put it in the video. Any clarification on points I made or corrections, please put that in the video. I'm not here to try to be the smartest guy in the room or defend anything I say just to defend it. I want to get the right information out there and get it in front of people to help people. So anything you can do to help, please do that. Any experiences you have with tax credits that we've been talking about, whether it's gone now, maybe what I'm looking at is expired, or you've had a bad experience with something or a good experience with something, or you know somebody that can really help you get something, it might be somebody inside the Economic Development Department of Utah. By all means, whatever you think, whatever the wisdom of the crowd is to help people, please feel free. So, all right, I'm going to wrap up the video, and thanks for watching, and I will see you on the next one.